It's not that you're bad at investing. It's that you've been trying to win a game. Even the professionals lose most of the time. Today, I'm going to show you exactly why, and the simple shift that lets you stop playing that game entirely while still winning. Here's the shift that changes everything. ETFs are a process. Stocks are a performance bet. And only one of those lets you keep your strategy even when your emotions spike. I'm Sage, and this is Financial Methods, built on years spent as a licensed financial advisor and inside consumer lending, watching how the system really works. And that's exactly why this channel exists, to give you more actionable financial knowledge in one video than most people get from an entire book on the subject. Stay to the end, because I'm going to show you the exact 3-step process to make this shift yourself. No complexity, no guesswork. Here's what stock picking actually demands. Not picking one good company once, picking winners repeatedly for decades, while also timing your entries and exits better than the market's collective pricing, over and over and over again. That's not a skill most people lack. That's a game with nearly impossible rules. Now, some of you are thinking, I already diversify. I own 10 different stocks. Here's the problem nobody tells you. Even 10 stocks often move together when interest rates shift, when earnings season hits, when the whole market regime changes. That's not real diversification. That's 10 bets pointed in the same direction, wearing different names. Real diversification isn't about how many tickers you own. It's about whether they actually behave differently when it matters. Here's a number that should change how you think about this completely. The majority of actively managed funds, run by full-time professional analysts with teams, data, and access most of us will never have, fail to beat a simple low-cost index fund over 10 plus years. Read that again. If trained professionals doing this as their full-time job can't consistently win, that's not an intelligence problem. That's not an effort problem. That's proof the game itself is structurally difficult to win. And here's the part that keeps the myth alive. You only ever hear about the wins. Someone doubles their money on one stock and it's everywhere. Nobody posts about the 5 picks before that one that didn't work. That's survivorship bias, and it's quietly convincing people the odds are better than they actually are. And if you're wondering which specific funds have actually been doing this quietly and consistently, we've already covered 3 of them in detail. Go check out our video on the hidden gem funds that can double, even triple your money faster than most people think. The numbers are real, and they're sitting right there for anyone willing to look. So what's the actual alternative? Instead of betting on which single company wins, you own a slice of many companies at once. So you automatically capture whichever ones do win, without ever having to correctly identify them in advance. And here's why this matters beyond just safety. Diversification isn't a luxury, it's your first real advantage. One bad pick in a single stock can be permanent. Fraud, dilution, a business model that quietly falls apart. In an ETF, one company failing doesn't sink you. That failure becomes background noise instead of a catastrophe. ETFs also hand you actual control, not guesswork dressed up as strategy. You control your allocation. You control your rebalancing, rules-based, not emotional. That's the difference between having a plan and hoping you get lucky. And once you know how to build that kind of consistent rules-based strategy, the next question becomes, what am I actually building toward? We broke down the exact number you need for retirement and how to get there in another video on this channel. That's essential viewing once this concept clicks for you. Let's talk about the costs most people never count. Most retail investors don't have a durable information edge. Professionals already do the research, already have the execution speed. To actually beat the market, your edge has to survive many cycles, not just one good pick. But here's the bigger cost, and it's not even about the money. It's behavioral, panic selling when the news gets scary, averaging down on a stock without ever updating your actual thesis on why you own it, revenge buying to win back a loss. These aren't small mistakes. They're the moments that quietly derail entire financial plans. This is exactly why we've shown you, step by step, how someone can go from $0 to $10,000 faster than they'd expect. Not through luck, not through stock picking, but through exactly the kind of process we're talking about right now. If you haven't seen that video yet, it's a perfect next step. Here's the good news. Making this shift isn't complicated. 3 steps and you're done. Step 1, pick one core, broad ETF to anchor your strategy. Not 5, not 10. 1. Simplicity is what actually gets followed through on. Step 2, automate your contribution. The decision only gets made once, not every single month. That removes the emotional trigger entirely. Step 3, set a rebalance check twice a year. A fixed date on the calendar, not a feeling. That's what turns investing from guesswork into an actual system. And if you want to see this exact strategy already in motion, real funds, real numbers, real timelines, go watch the video where we show you exactly how $10,000 can double, even triple, using this process. It's not theory, it's already broken down for you. So let's bring this home. You don't have to predict which company wins. The only prediction you actually need to make is, I will keep investing long enough. That's it. That's the whole edge. It's not that you were bad at this. You were just playing a game that even the professionals lose most of the time. Now you know the process that lets you stop playing it and start winning instead. If this is making sense to you, that's exactly why this channel exists. To hand you the real numbers plainly, without the noise. Hit like, subscribe, and share this with someone who needs to hear it's not their fault. And stick around, because next time we're going somewhere I haven't taken you yet, and it's going to change the way you look at your money completely.